Imagine a slot machine. You pull the lever, the brightly colored wheels spin, and your heart races. Most of the time, you lose. But occasionally, you get a small, thrilling payout. It is just enough to keep you sitting there, mesmerized, continuously feeding dollars into the glowing box. Now, imagine that this slot machine, ISN Sati, sitting on a casino floor. It is sitting in your pocket, and the prize it promises ISN money at is human connection, validation, and maybe true love. In the early 2020s, a single company reached a staggering valuation of nearly $50 billion. But this giant didn't build its empire by selling oil or manufacturing cars. It built its massive empire on human loneliness. You might think you have a choice in the modern dating market. You might think that if Tinder ISN isn't working out, you can simply switch to Hinge, OkCupid, or Match. But the truth is, you are caught in an illusion of choice. All of these platforms are owned by one single corporate overlord, Match Group, and today, we are going to expose the dark, psychological manipulation at the heart of their multi-billion-dollar business model. Because behind the clever marketing campaigns lies a horrifying paradox. The ultimate, stated goal of a dating app is to find you a romantic partner so you can delete the app forever. But the ultimate goal of a publicly traded corporation is to maximize user retention and extract as much money from you as humanly possible. These two goals are fundamentally incompatible. If Match Group actually did its job perfectly, it would go bankrupt tomorrow. So instead of genuinely helping you find love, they built a monopoly meticulously designed to keep you single, hooked, and paying. To understand exactly how they pulled off one of the greatest psychological heists in modern history, we have to look at a deeply guarded secret hidden within their source code. It all started as a simple, almost innocent idea. Before the smartphone era, online dating was a tedious, heavily stigmatized process involving desktop computers, endless personality questionnaires, and static profiles. But in 2012, a team of developers shattered that old paradigm. They created Tinder, and with it, they introduced a mechanic that would permanently alter human behavior: the swipe. Swipe right if you like them, swipe left if you don't. It was effortless and entirely frictionless. But most importantly, it was a highly addictive game. The genius of Tinder wasn't in its matchmaking algorithm. It was entirely in its user interface. The creators deliberately designed the application to mimic the physical mechanics of dealing a deck of cards. You never knew whose face was coming up next. This unpredictable anticipation triggered a massive release of dopamine in the brain, utilizing a psychological concept known as intermittent variable rewards. Every time you opened the app, you were pulling the lever on that digital slot machine. When you finally got a match, it delivered a hit of pure validation. Just like a gambler chasing a high, users kept coming back for more, swiping through millions of faces late at night. The global growth was explosive. Within a couple of years, Tinder was processing over 1 billion swipes every single day. Behind the scenes, the parent company, Match Group, realized they had discovered a way to digitally commodify human desire. Armed with unparalleled capital, Match Group went on a ruthless shopping spree, aggressively acquiring every major competitor. They bought OkCupid, Plenty of Fish, and even Hinge, the app famously marketed with the slogan "designed to be deleted." They created an airtight monopoly over the digital dating landscape. At the peak of their power, Match Group was untouchable. Their stock soared, and to Wall Street, they were a flawless tech giant printing money. But behind closed doors, a massive structural problem was silently brewing. The fundamental flaw of the dating app business model was slowly catching up to them. Investors demanded constant, aggressive financial growth. They didn't just want more users, they wanted exponentially higher revenue extracted per user. But how do you continuously extract money from a service that is free to use? The sinister answer was to intentionally break the product and then charge desperate, lonely users a premium fee for the cure. Match Group quietly began shifting their platforms away from genuine human connection and toward a highly predatory freemium model. They introduced a hidden internal ranking system, known as the Elo score. Originally designed for rating chess players, This algorithm assigned a secret, permanent desirability score to every single user based on their right and left swipes. If you had a high Elo score, your profile was pushed to the very top, shown immediately to the most attractive users. But if your score dropped, if you swiped right too frequently out of desperation, you were banished to the very bottom of the digital pile. You became practically invisible. This wasn't a technical glitch, it was a coldly calculated feature. By artificially throttling a user's visibility, Match Group manufactured artificial scarcity. They took away the matches and then offered to sell them back at a massive markup. Suddenly, your free app wasn't working anymore. The dopamine hits abruptly stopped. The crushing weight of loneliness crept back in. And right at that moment of maximum psychological vulnerability, a brightly colored pop-up would appear. For $15 a month, you could buy Tinder Plus. For $30, you could upgrade to Tinder Gold. You could buy boosts to temporarily skip the line and actually be seen. It was the digital equivalent of an invisible bouncer at a nightclub, physically blocking you until you slipped him cash. Match Group employed vast teams of behavioral psychologists to analyze exactly when a user was most likely to feel rejected, optimizing the precise second to hit them with a paywall. Their massive revenue depended entirely on users staying single, feeling endlessly inadequate, and swiping until their thumbs went numb. But you can only squeeze your user base for so long before the illusion shatters. The tipping point arrived as a perfect, devastating storm of user burnout, whistleblowers, and legal action. A profound cultural shift was taking hold. People weren't just mildly annoyed. They were experiencing severe psychological damage. The phenomenon, known as dating app fatigue, swept across the globe like a virus. Users reported skyrocketing levels of social anxiety, depression, and plummeting self-esteem. The infinite scroll of faces had commodified human beings, turning actual people into disposable commodities in a ruthless digital meat market. But the true collapse of the empire wasn't just cultural. It was brutally financial and legal. Former employees began leaking the ugly truth about the internal corporate culture. Investigative journalists published scathing reports exposing how the algorithms were explicitly designed to withhold matches, specifically to force premium upgrades. Then came the devastating lawsuits. The Federal Trade Commission formally sued Match Group, accusing the company of using fake love interest advertisements to maliciously trick consumers into purchasing premium subscriptions. The FTC revealed a horrifying practice. Tinder would deliberately send emails to free users claiming they had an exciting new match, knowing full well that the match was from a flagged bot, a scammer, or a completely fraudulent account. But to see the face, the user had to hand over their credit card. It was outright, undeniable fraud. Massive class action lawsuits were filed, accusing Match Group of deceptive, illegally addictive design. Plaintiffs argued the company intentionally employed psychological manipulation tactics utilized by the casino industries to create a compulsive use loop that prioritized corporate profit over human well-being. As these dark revelations hit the mainstream news, the financial markets reacted with brutal efficiency. Once a pandemic-era darling, Match Group's valuation began to violently plummet. From a staggering peak of nearly $170 a share, the stock crashed down into the low 30s, wiping out tens of billions of dollars in market capitalization. Institutional investors abandoned ship as user growth stagnated. The younger generation, specifically Gen Z, began deleting the applications in massive droves, loudly citing the toxic digital environment and predatory monetization. The great monopoly was cracking. The company that proudly boasted about creating millions of beautiful relationships was now being publicly exposed as a predatory machine that manufactured loneliness on an industrial scale. So where exactly does that leave this fallen titan of romance today? Match Group is still a massive corporate entity, but it is deeply wounded, bleeding out users and desperately clinging to its former glory. In a frantic bid to appease furious shareholders and recover evaporating revenue, they have resorted to increasingly absurd monetization tactics. Tinder recently introduced a VIP-only subscription tier called Tinder Select, costing an unbelievable $500 a month, or $6,000 a year. It is a glaring, desperate attempt to squeeze the maximum amount of cash out of the wealthiest or most hopelessly desperate users remaining on the sinking ship. The apps are still running, the massive server farms are still humming, and people are still swiping, but the magic is entirely gone. The grand illusion has been permanently shattered. When we zoom out and look at the whole story of Match Group, we aren't just looking at the traditional rise and fall of a tech company. We are looking at a terrifying loophole in human psychology and the modern global financial system. It proves beyond a shadow of a doubt that if you can isolate a fundamental, primal human need, the biological desire to love and be loved in return, you can weaponize it. You can package it, artificially withhold it, and sell it back to lonely people at an enormous, life-draining markup. Match Group certainly did not invent human loneliness, but they were the first to successfully industrialize it. They realized early on that a satisfied, happy customer is a lost customer, and so they built an entire digital universe based on keeping you perpetually hungry, dissatisfied, and constantly searching for the next face. The next time you open up a dating app, swipe through a few profiles, and feel that tiny, fleeting rush of dopamine, you need to pause and ask yourself a very serious question. Are you really looking for a life partner? Or are you just blindly pulling the lever on a digital slot machine, willingly playing a rigged game mathematically designed by billionaires to make sure you never, ever win?